Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I don't have a great deal to say since not a lot has changed since the weekend, but I did want to point at a couple of things today because the memes in this case write themselves. So I'm going to show you that. I'm going to talk a little bit about paranoia and distrust versus maybe all of that being unwarranted, and then we'll look at maybe one or two charts, but obviously not a great deal has changed since the weekend. So first of all, I found this, okay, markets saw after Fed cuts key rate by 0.5 point, and of course the date for this was September 18th, 2007. Needless to say, we know what came shortly thereafter. We saw major tops in the stock market just 4 weeks later. So wild, wild times. I wonder if history is going to continue to repeat like this. Speaking of history repeating, this is admittedly a little bit of a messy chart. But take a look at this, okay? This is the 2000, the popping of the dot-com bubble. And you can see that we got the first rate cut. The market had already topped. And then we do get some relief bounces along the way, up to 20% rallies. But ultimately, the pivot from a Fed funds rate that was paused to cutting saw a major top come in for the stock market. Similarly, in 2008, the pivot from a pause to cutting saw the top come in for the stock market around 4 weeks later. So you can pause your screen and take a good look at this if you're interested. And I see a lot of people saying, well, Camel, why are we only looking at the prior three occurrences? There was plenty of other times we cut rates and the market rallied and it wasn't a bearish cut and all of this kind of thing. But remember, the context is key. If we're cutting into normalization, the markets can do very well. They can continue to rally. If we are cutting into a slowdown, something like these prior instances highlighted yellow, then we do typically see major tops come in for risk assets. So I've been making the case that we are indeed cutting into a slowdown. The jury is out about this, as we're going to talk about in just a minute, because a lot of the data is kind of fake or made up or manipulated in some way, shape or form. There's some people in the camp of, let's call it paranoia, like me, who don't really trust any of it. And of course, there are people on the other extreme of that spectrum where they just think that why would anyone lie to us? Why would the government not have our best interest at heart? Why would the central banks try to fudge policy and all of this kind of thing? And the facts are, okay, no one can really be sure until after the fact, until after we've seen a top come in. Only then can we actually look back with hindsight and say, yep, the paranoia crew were right, or the paranoia crew were too paranoid. For me, as always, the charts are king. And whilst I use all of this kind of macro data and stuff like that to give me hints that we're going in the right direction according to my base case ideas, ultimately, it will be the charts breaking down that sees me exit the markets, flip short, and all of that stuff, okay? If the markets continue to just scream higher, then I will say, okay, I was wrong. Maybe I was too paranoid. Maybe they aren't out to get us. And in fact, maybe instead, I fall into the camp of people that have been calling recessions erroneously. And there is no recession, and we're going to go up only. And if that's the case, then I don't really care as ever. I just want to stay on the right side of the trade and remain long until we eventually do see some breakdowns. But historically speaking, I personally see no reason to doubt that we are going to be forming a cutting cycle similar to many of the ones shaded yellow on this chart. That's my opinion, as I'm sure you're well aware by now. Not to mention, every time we see this inverted yield curve paired with a flattening Fed funds rate, the US economy is heading into a recession. And when the Fed starts cutting rates and the yield curve flips positive, we're on the brink of a recession and a major market crash. Now, the market currently has an 85% correlation to the summer of 2007. And if you've been following the channel for any length of time, we have been drawing a lot of parallels to 2007, particularly over the last few weeks, as it's become very, very obvious that that correlation to 2007 is so strong. And so again, to me at least, it speaks to this time being very similar to the prior times we were cutting into slowdowns. Okay, not like this time right here where the market did very well. Instead, I think we are much more similar to cutting into a slowdown rather than cuts into normalization. dollarization. And another piece of evidence in this favor, okay, is the year-over-year change in bank credit for all commercial banks. Notice every time we get a top and a rollover, okay, we see recessions come in shortly thereafter in every instance, and we are already well past the current top. So does it tell us a recession is coming in the not too distant future? Again, I continue to speculate that it does, whilst being open to staying long until the markets truly do break down. Now, when I said earlier today that the memes write themselves, okay, take a look at this current headline from The Economist. America's recession signals are flashing red. Don't believe them, okay? And it goes back to what I was saying about paranoia versus maybe the people that are paranoid need to get out more, okay? Maybe we need to stop being conspiracy nuts. Maybe everything is okay. Maybe they're really not out to get us. And like I said before, we won't really know until after the fact, okay? But for me personally, I fall into this camp of people that keep seeing things like this and asking myself the question, what's their motive here? Why do they want everyone to think that we're not going into a recession? Why do they want us to suddenly ignore historical indicators? And I'm going to term this kind of like an excuse, okay? And I think there's been an unusual amount of excuses showing up over the past few months, maybe even longer than that. For a couple of examples for you, okay? We've got the SAM recession rule indicator, which has flashed, telling us to be open to seeing a recession just like all prior instances. However, this time is slightly different because SAM came out and said that this is an erroneous breakout. It shouldn't be trusted, and it doesn't really count. It doesn't have the same significance, and it doesn't carry the same weight as all the prior instances. And maybe she's right in her assessment, okay? I mean, she did invent the thing after all, so maybe she does know what she's talking about. But again, personally, I just think it smells a little bit of this. It smells a little bit fishy to me personally. Now, I don't know her, and I could certainly be too paranoid. I also think that some of this may well be to do with your experience and upbringing. If you grow up in an environment where you don't have a lot of trust in the people around you and all of these kind of things, maybe it leads you to be more paranoid. And perhaps if you're in the camp of people that says, no, the Fed has our best interest at heart, okay? Powell is doing everything he can to make sure that we don't starve to death and blah, blah, blah. If you're one of those people, maybe look at your background. Did you grow up in a loving, trusting environment? Do you have any reason to be paranoid? I do wonder if there's a heavy correlation between the two. And even if we say, okay, the SAM recession rule is invalidated, it doesn't count this time. Okay, this time is different. I still don't know how we get around things like the 4-week moving average for initial claims, okay, looking worse than what we saw in 2007. And again, when I was talking about excuses, I keep seeing people point to things like this and say, yeah, well, immigration's messing it up. Yeah, well, people are working at home now since the C-19 era, and thus a lot more people have jobs than is showing up. Yeah, well, the government's creating a bunch of jobs, right? There's always these excuses. But ultimately, I'm a chart guy. I don't really care about the narrative. I don't really want to know about the deep details. I just want to know, do these charts continue to flash recession indicators? And I personally don't want to sit here and say, no, everything is fine. Let's just ignore the data. That, historically speaking, would not have served you well. As ever, I do believe in being open to staying long until the market truly breaks down. But to me personally, who is admittedly quite a paranoid person by nature, I think alarm bells should be ringing when we start to see things like this. And then keeping on with this theme, okay, of it's not paranoia if they really are out to get you. Whilst, like I said, there is a million reasons to make excuses and try to discount the fact that the recession indicators are flashing and the jobs market is deteriorating and all of this kind of thing, okay, and the SAM recession rule doesn't count this time, well, we also know that within the last couple of weeks, okay, the Fed has released the data for the jobs market, and the Fed's cooked books over the last year had to revise the job numbers down by over 800,000. This is the largest downward revision since the 2008 financial crisis. Everything about this administration, at least from my perspective, and apparently from Johnny's as well, is fake. So a super, super, super wild time to be alive. And I know a lot of people seem to think that, you know, the paranoid people are crazy and conspiracy nuts or whatever you want to label them. But to me, I think if we do see some major tops come in, if we do manage to get out of the way of the markets, enter some short positions, so on and so forth, I think we're going to be able to look back at this time period in, let's say, the next 6 to 12 months and say, you know what, that was really obvious. It was really, really obvious. They were out here trying to do damage control. They were trying to tell us not to believe all the recession indicators. There was an excuse for every metric that flashed as to why it doesn't count this time and all of these kind of things. And I really do think we're going to be able to look back and say, you know what, that was pretty obvious. So with all that said, not a great deal for me to focus on since not a great deal has changed since the weekend, but I am still looking for one final move down in the VIX to find that cycle low in the first week of September, and then I'm going to be looking to get some VIX exposure, expecting something like this, followed by a massive spike and breakout. I'm noticing gold continues to rip, and we likely do have a cycle low in the not too distant future. It's been a while since I've checked my fractal, and we are more or less following it. We're more or less going in the right direction, so I'll take that back off log scale, just something to keep in mind. I also noticed silver is very, very close to breaking out above that major $30 level. So this is going to be critical for two reasons. Number one, okay, we will have a breakout of this downward sloping red resistance line, but number two, that $30 level goes all the way back to August of 2020. So very, very long time coming, and if we can finally get above here, I would think that we rip, and we rip hard for silver. Bitcoin still kind of sitting here, hanging around, not doing a great deal of anything, but so far so good. We are creeping up, and that is what I want to see from Bitcoin over the coming weeks. And then since we've been drawing so many parallels to 2007, 2008, here is the fractal that marked the ultimate top in the GFC for the Nasdaq. If this thing is going to continue to play out, it tells us maybe a little bit of shakeout this week, followed by a rip up into around the third week of October, and then we could be looking to see major tops come in, assuming this thing is going to repeat, of course. We're going to find out, as always. We're going to continue to take it one day at a time, as always. For everyone that is celebrating bank holiday today, I hope you have a fantastic day. For everyone else that is going to be continuing to work like I am, then here is to a fantastic week. And until tomorrow, take care from me. All the best. Cheers. Bye.